What could be the driving force behind the S&P 500's recent gains, unseen since 1971? Let's take a moment to delve into the remarkable journey of the S&P 500. As we stepped into March, we found US stocks thriving in uncharted territory, with the S&P 500 grabbing another week of substantial gains. A significant milestone was achieved on a recent Friday, when the S&P 500 posted gains in 16 out of 18 weeks, a phenomenon last observed in April of 1971. According to Dow Jones Market, the index recorded a weekly gain of 0.9%. Yes, you heard it right, 0.9% in a week. This is no small feat considering the volatility and unpredictability inherent in the stock market. The S&P 500's performance is something to marvel at, and it's worth taking a moment to appreciate the sheer magnitude of these gains. But the story doesn't end there. As we continue to navigate through 2024, the S&P 500 is showing no signs of slowing down. According to FactSet data, the index has ascended a whopping 7.7% so far this year. This is a significant climb, especially when we consider the broader context of the global economy and the myriad of factors that influence market performance. The US stock market continued its upward trajectory on that same Friday, with the Dow Jones Industrial DJIA witnessing a rise of 0.2%. Meanwhile, the S&P 500 SPX gained 0.8%, and the technology-heavy Nasdaq Composite Comp climbed 1.1%, according to FactSet data. Both the S&P 500 and the Nasdaq ended the day by closing at all-time highs. The S&P 500's impressive performance is causing a stir in the investment community, but what's behind this surge? Stay tuned as we explore how artificial intelligence might be a key player in the S&P 500's recent gains, and what this could mean for the future of investing. Investors are looking towards a seemingly unlikely source for these gains: artificial intelligence. The optimism surrounding artificial intelligence, or AI, and its potential impact on the economy and markets is palpable. It is not a misplaced enthusiasm either. Artificial intelligence is no longer a futuristic concept. It is here, and it is already making waves in the financial markets. What's more, investors are beginning to believe that the benefits of AI spending will not be confined to a narrow slice of the market. This optimism is not without merit. AI, with its far-reaching implications, has the potential to transform a multitude of sectors. From automating mundane tasks to making complex financial predictions, the applications of artificial intelligence are vast and varied. Take, for example, the surge in AI server demand that led to Dell's big quarter, sending their stock soaring 19%. This is just a glimpse of the kind of impact AI can have. It's not just the tech companies that stand to gain. Sectors like healthcare, agriculture, and even entertainment could see significant benefits from AI implementation. The market's dramatic increase over the past 4 months is leading investors to believe in a second leg of the rally. Now, what is this second leg all about? Well, in the world of finance, a second leg rally refers to a situation where after an initial surge in market prices, there's a brief period of calm or minor pullback, followed by a resurgence or a second leg of price increases. This second leg belief is not just a hopeful optimism, it's a confidence backed by the momentum of the market. It's a belief that the market isn't done with its growth, that there's still room to run. And in this case, a significant part of this belief is rooted in the potential impact of artificial intelligence, or AI, on the economy and markets. Artificial intelligence has been a game changer in various sectors, from healthcare to manufacturing, and now it's making its mark on the financial market as well. Investors are starting to realize that the benefits of AI won't be limited to a narrow slice of the market. It's not just the tech companies or the AI startups that stand to gain. The Chief Investment Officer at BMO Wealth Management, Young-Yu Ma, expresses this sentiment quite aptly. He mentions that there's a potential productivity boom from AI that could keep fueling stock market gains in the coming years. This is a crucial point to consider. AI is expected to increase productivity, reduce costs, and drive efficiency across industries. And this is why there's a growing optimism about the second leg of the rally. So let's take a step back and look at the broader picture. The S&P 500 has been posting gains week after week for the first time since April 1971. And now, with the promise of AI, there's a renewed belief in further growth. This is not just an ordinary rally, it's a rally powered by the transformative potential of AI. This rally, powered by the potential of AI, is creating a wave of optimism among investors. This optimism is not just about the immediate gains, but also about the long-term impact of AI on the economy and the markets. It's not just the S&P 500 experiencing these gains, the broader market is also riding this wave. Now let's take a step back and look at the bigger picture. The US stock market as a whole has been basking in the glow of these recent gains, with the Dow Jones Industrial DJIA and the technology-heavy Nasdaq Composite Comp both posting notable increases. On the last trading day of the week, the Dow Jones Industrial, an index that tracks 30 large publicly owned companies based in the United States, rose by 0.2%. While this might seem like a small increment, in the grand scheme of things, it contributes to the ongoing upward trend we've been witnessing. Moving on to the Nasdaq Composite, we see a similar story. This index is heavily weighted towards technology companies, making it a crucial barometer for the tech sector. On that same Friday, the Nasdaq Composite climbed by 1.1%. This increase is particularly significant given the tech industry's vital role in driving the current market rally. But the gains didn't stop there. Both the S&P 500 and the Nasdaq Composite closed at all-time highs, underscoring the strength of this market rally. It's worth noting that these record-breaking figures aren't isolated incidents. They're part of a broader trend that has been shaping the US stock market, and by extension, the global economy. What's propelling these gains? The optimism surrounding the potential impact of artificial intelligence on the economy and markets plays a significant role. Investors seem to be realizing that the benefits of AI spending aren't confined to a narrow slice of the market. Instead, they're permeating across sectors, fueling a potential productivity boom that could keep driving stock market gains in the years to come. In a nutshell, the broader market picture is one of consistent growth and record-breaking highs. And while the S&P 500 might be stealing the headlines with its robust performance, it's clear that this is a market-wide phenomenon. The entire market appears to be benefiting from this AI-fueled optimism. But what could the future hold for the S&P 500 and the wider market with the continued influence of AI? As we cast our gaze towards the horizon, we can see the potential of artificial intelligence shaping the future in profound ways. The influence of AI on the economy and markets could be massive, with the technology being a major driver of a sustained productivity boom. This boom is not just a theory, but a tangible possibility that could fuel the next leg of the rally, keeping the S&P 500 and the wider market on an upward trajectory. Imagine a world where AI-driven automation increases efficiency across industries, where machine learning algorithms predict market trends with uncanny accuracy, and where data analytics driven by AI transform the way businesses operate. This is not just a figment of our imagination, but a future that is within our grasp, a future where AI plays a pivotal role in shaping the economy and markets. The potential of AI goes beyond just boosting productivity. It could also lead to the creation of new industries and job roles, fostering innovation and driving economic growth. The ripple effects of this could be seen in the stock market, with companies at the forefront of AI technology possibly seeing their stocks soar. Furthermore, the influence of AI is not limited to a narrow slice of the market. It's a broad spectrum transformation that could benefit various sectors, from healthcare and education to finance and manufacturing. This paints a picture of a future where the gains from AI spending are widespread, driving the S&P 500 and the wider market to new heights. However, with great potential comes great uncertainty. How will regulation and ethics shape the AI landscape? What will be the societal implications of widespread AI adoption? These are critical questions that will shape the future impact of AI on the economy and markets.
As we look towards the future, the potential impact of AI on the S&P 500 and the wider market could continue to drive record gains. This is not a guarantee, but a possibility that we should prepare for as we navigate the brave new world of AI.